and welcome to Nirmal Bang, ladies and gentlemen. I'm Hiral Datia. We have with us Ria Singh, the senior analyst, currencies, joining in. Ria, welcome to the show. Ria, my first question coming to you is firstly to start off with regards to where the dollar index is concerned. Clearly, if you go to see the dollar index is at its highest levels currently as well since 2002. And it has eased slightly as the Jackson Hole looms now. So, what's the sense and how do you see it moving?
Well, I think the market already moved, in quite an aggressive tone, or what you can say, favor into the safe havens because of the Jackson Hole Symposium. So, what we are looking forward to this meeting is what will be the statements from the central bankers, and of course, any hawkish statement will further, uh, you know. Result into stronger pace of dollar index also. So basically, it has cooled off a bit because it was just the anticipation move that was there in the last 2 weeks. And today, because there is statements that are scheduled to come out from this meeting, it has become stable. And same scenario could be seen in other currencies as well. So I think for the dollar index, taking to whatever the statements that the Fed FOMC members have released in the past 2 months, everything is indicating that they'll continue with the stronger hold. Of course, if you look at the 75 bips rate hike, I think that will not be in the picture. More of 50 basis rate hike will be expected. So even if balance sheet contraction, they had said from June 1 that they'll be contracting their T-bills around $30 billion, though they didn't do it in the first month, but in the past 2 months, we have seen Fed going forward with getting the roll off, the runoff happen into the T-bills also. So 30 billion from August, 30 billion in July has been, allowed to get run off from the balance sheet. So I think if there is any statement in regards with that, or any, increase into that quantum, will further weigh onto the sentiment, and you will see dollar index moving much faster. So I think 105 is the support that we maintain to continue with the dollar index. And as long as it stays above that support, it will continue with its bullishness. So 110, 112 is something we are eyeing on a short to medium term.
Right. So, that's with regards to the dollar index. Simultaneously, if you see in terms of the Indian rupee as well, around 79.8 is where it's trading at currently. Do you think that we should let the Indian rupee depreciate? And secondly, do you think high commodity prices could also put the rupee under pressure?
Well, I think central bank, the RBI, is much concerned about controlling the volatility rather than the depreciation part of the rupee. So what they are time and time again have said that they'll be controlling the volatility and will allow the natural course of depreciation into the USD INR. Now, if you look rupee, it is maintaining the threshold of 79 in the lower lows, and this is, I think, one of the reason where even the central bank is eyeing that level as a support, because once it surpasses 80 levels, there is some or the other intervention that has come into the Indian rupee from the central bank side as well. Whether it will be allowed, I think depreciation will continue into the Indian rupee, and the pressure from the Fed tightening of the balance sheet will again weigh in. The commodity prices will, obviously, we being major importer into the crude oil, I think if there is a major upside into the crude oil prices, there will be some effect that could be seen into the Indian rupee as well. But since that has cooled off, there is a part of trade deficit which is continue to widen. And there is an anticipation that since there is a lot of barriers that has been put up with the export of the country, the imports will and the imports have increased significantly rather than, and exports have actually not moved up quite much into the, if you compare the quantum of both the perspective. So I think the trade deficit will have an impact on the Indian rupee going forward, and it will continue to depreciate. 79 is the support for the Indian rupee, and like I said, any dip into the Indian rupee will be an opportunity to go long into the Indian rupee.
Right. And in terms of the euro, that has also bounced back above parity. What's your view?
Well, I think the weakness or the cool off that has happened into the dollar index is what is getting translated into the euro and pound. There's even if you look at the numbers, the PMI have come on the weaker side for the euro as well as for the UK. So this is again an indicator that the recession is due into the euro economy altogether. So the numbers are not very good to support the bounces that have come into both the pairs. I think it's just a technical recovery that is coming into the Euro USD and Pound USD. So a short-term buy or long one could take with a risk, but on a broader perspective, we are still bearish on Euro as well as on the Pound.
Right. And what are the strategies that you would recommend?
The strategy that you can go forward with is with going long into the USD INR above the level of 80.15. So this is 28 September expiry. So here you can go long above the level of 80.15 with SL at 79.88. You can keep our target at 80.30. You can also go long into the GBP INR. Like I said, there could be a short bounce back, but this is whole with respect to the cool off that can happen into the dollar. So here also maintain a very strict SL into the GBP INR and Euro INR. So you can go long into the GBP INR above the level of 94.78. Keep a strict SL at 94.50 and target at 95.50. You can also go long into the Euro INR. Here, you look for a breakout of 79.95. Keep a SL at 79.60 and target at 80.25. So these are the three strategies that you can go through.
Right. Thank you, Ria. Thank you, participants, for joining in.
Thank you.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.